Here we go. All right. I mean, not sure that's going to matter that much, but I saw the news about the Delaware court ruling. I think it doesn't matter, but I'm also inclined to think that probably even if they got a payout, if it's 6.8 million shares times the price of the stock, that's not really that much. I mean, in terms of, yeah, you spend about 20 million, but I don't think that that's not going to be paid out to shareholders. It's just talking about insurable losses. Anyways, I don't think that's going to be a huge deal. Bigger news would be probably talking about Thursday, Friday price action and what that might mean for the next couple of days. In terms of a market shift, didn't really see one, just kind of saw everything sort of piddle into the end of the week. There was a pretty obvious, I call it like an upthrust, but it was pretty obvious, and that happened in extended trading hours only. And during regular trading hours, we didn't come significantly up back to retest this main trend, which to some degree may make sense because in regular trading hours, that trend doesn't exist in the same way. So if you were to just go back and look at where those regular trading hours markers are on this downward trend on IWM, we really just barely popped above it on Friday. Unfortunately, did not want to hold 206. And I was looking at the market most of the day, just had it on the screen and was kind of doing other things, just watching the sell-off and bounce again. And the sell-off goes and hits a new low, which is significant because 202 is a really significant level for the small caps. And I'm looking over at AMC and GME and seeing what they're doing. AMC doesn't do any of that. It doesn't go down low. It doesn't really do anything. And in some ways, it just looks like it goes sideways on Friday. And the truth is that while that's true, that sideways does imply a bit of a creek jump. It's not the best one. But you would be looking at sort of a localized hop here that did occur on Friday. And there was a couple other pretty key factors to that we had talked about with what we call iterations, right? And so oddly, the small cap ETF is kind of doing a bunch of nothing. Again, if you zoom out and look at big picture, it looks like it's just kind of more sideways chop in this range. This looks like bearish action right here, unfortunately. And I wouldn't have necessarily confirmed that until the end of the day on Friday, as is typical in the market. They kind of leave the best for last. I think you could have looked at it and said you probably think it could end up being kind of bearish. But I would say hold out on hope that this was going to actually reverse soon due to extenuating conditions. I mean, the market's oversold. You can say whatever you want to say about a bear market, about a market crash. But typically, even if you're going to go into a market crash, this would be the time that you would get a pretty major reversal before a bigger dump. And so my expectation has been that, yeah, this is going to go down again more than likely, but we should see somewhere between like a 10 to 15% rally even. And because you need to come back up and really enlist sellers again and get this thing going. Right now, you have heavy volume throughout this bottom, and that doesn't necessarily mean it's bullish, because again, it could be that this is just part of the beginning of a sell-off. And I've looked at a lot of different stocks, right, in the last few years, and ETFs in some ways are very different from others in that they don't, I wouldn't say they don't obey the rules of your indicators, but there's some truth to that. Like if you look at the S&P 500 during bull rallies, it doesn't really make any difference if it's overbought. Like even on like the 4-hour daily going up to the weekly, you can stay overbought for a really long time. And so it's better if you're going to use those kind of indicators to trade on maybe even a smaller time frame, just to indicate like local short-term swings or entry and exit points, as opposed to long-term that this is what's going to happen. Well, going back on like the small cap ETF and how it's dealing with all these tariffs and stuff, it's looking very much like a lot of different areas on its own chart. I'm trying to compare it to itself. And again, if you go to like 2015, we had a similar like 10 to, I think it was like 12% sell-off in 2015. And it was basically like a sequence of sell-offs that was building in intensity. And that's honestly what kind of looks the most similar to me. This doesn't really look to me like the COVID sell-off. This doesn't really look to me like the 2008 market crash. Go back as far as the dot-com technology bubble and all that stuff, sure. And this is what a lot of the news is about anyways. I'm not going to sit here and regurgitate the news. You've already read it. You already know that a lot of people think that this is coming and that's coming and yada, yada, yada. But on the big picture, what we saw a series of sell-offs that kind of increased in volatility as we went, and there was a kind of double push before this bigger push down, both of which were kind of extending high. This is fairly typical of distribution to have this kind of a bow shape, almost like a U, right? And it's in contrast to what we see as some strength, which is again more of that like almost like a rainbow, right? And I think that's important to note that this has been going on for a while, and certainly like the sell-off in and of itself, from a technical standpoint, we went back and looked at it, doesn't seem very profound to me. It looks like it was sort of established beforehand going into January, this idea of like a Trump pump because of the president, and then him subsequently pulling his own rug. I think it's a bunch of just spins on the media. Like, I think the media doesn't have any way of looking at this beyond, they don't look at technicals, they don't look at what's kind of going on with the wind changes, so to speak. It's kind of like somebody who looks out the window and says, oh, it's raining, and that's when they decide that it's raining because there's too much moisture in the air. You know what I mean? Like, then they'll just say there's too much moisture in the air, it's raining or whatever, right? The clouds got too heavy, now they're letting go of their rain. Whereas a weather forecaster would say, well, this really happened thousands of miles away and was built up over weeks coming into this point. And I think that that's sort of the way I feel when I look at the chart, is like, there really wasn't any indication that once we got to like the 250s, for example, on small caps, that it necessarily had to break out and go way higher. There was a lot of chances of pretty deep retracement based on volume, how overextended we were, etc. Anyways, my point being is that when you look at the big picture and you go back, and I looked at the S&P 500 pretty extensively on Friday, and I don't feel like this, again, came out of nowhere. It looks like a series of up thrusts that were like pushing against highs that were just failing to advance here. This looks like a pretty traditional cat ear, and you can even see like this SOW right before it went back up. Like, it goes and pushes new lows. And I know that sometimes we'll look at the S&P 500 and be like, well, that's just a spring, yada, yada, yada. But then look back and see what's been going on, right? This is a widening trend. It's been consistently pushing down to that widening until it got to what? Excuse me, a distributive top. And then if you look locally, there's actually another one right here that was building out, and this is that bearish trend building out. Now, arguably, this could be near its bottom. It could also be that, you know, this triangulation means next to nothing to you. But to me, this means a lot. When you have a widening that's pushing up, and this is the S&P 500 that we're staring at right now, typically if that breaks down, it means you're going to first return back to, that's the first target, is you're going to return back to the starting point. For the S&P 500, that's 565. Pretty clear. It's not really complicated, doesn't really seem more than that to me. You know, you may argue, well, I think it comes down to 540. And then later you may say, well, maybe it even goes down even further, right? Down to like 482. I mean, there's a long-standing widening back here, right? That looks a lot like what happened leading up to COVID. And it's weird to me that there's so many chinks in the armor when you go back and you look at something like the COVID drop, that it does feel very manufactured in some ways. Like it was just kind of waiting, market was waiting for a reason to kind of sell down. And this may, again, be something that you could say, well, I don't think that's the case. Or you think, no, I totally think that's the case. I'm not going to put on a tinfoil hat for this. But I will say that, yeah, there were chinks in that armor early on. You can see in 2018, beginning and end of 2018, there's some pretty big sell-offs that to me look like sign of weakness, you know? And then if you go back and you look at what happens later, returning back to these levels that were kind of marked off, really right between them, and then slightly below them, and then looking right above, like to me it just looks like, okay, so the market was already in a position of fragility, like it could have broken down, needed obviously some kind of a news catalyst. It got it, and it does. And then you get this really long-standing rally that's historic, yada, yada, yada. Go back a little bit further to a time that you probably don't even remember, like why would this have been selling off the way it was back here, okay? And I think this is in some ways very similar to what we're experiencing because like 2008, the COVID drop was pretty darn dramatic. I mean, there's a lot of things that we could talk about historically that happened. But notice that like once we leave and we kind of push those original highs, it takes a long time after 2008, but it does rally for years and eventually pushes those highs. And you can see that once we leave, there's a lot of effort made from 2014 all the way through probably arguably 2016, since that's the final drop there, to come back down and to check those previous all-time highs from 2007. So that's quite a long time. It's quite a long time. Now, why am I talking about this right this very second? Well, this is the market we're in right now, okay? We've had a really historic rally. We did come back, and we spent a lot of time, I think, coming back down to retest those levels. We did a 2-year cycle basically here to rebound off of 353. It would seem pretty unlikely to me that we would go all the way back down to 353 again, unless the market truly was in like a market crash and was going to have some kind of major historic bearish recession and all this other stuff. Not going to rule it out. I'm just saying, unless that were the case, this has been tested. And I remember back here that folks were talking about this for years, but when we were going into that, I don't want to repeat myself over and over. When we were going into that October bottom, there was a lot of people. This was a place where we had historic put levels in the market. There was all kinds of headlines about how retail was, preparing for this market crash and all this stuff. And then we go the opposite way. And by the time that finally was confirmed and turned around, I don't think people really bought into this idea until maybe mid to late 2023. And it's like the turn had already happened. The sell-off had already happened. There was a fear of market crash back here in October, but it was already coming back down and retesting those levels, and it did. And when I look at where we are now, I can certainly see why there's a easy to find technical argument that this is an extension that went a little too far. It developed a bearish top. You have a series of creeks and whatnot that previous to that could be seen as, yeah, potentially this was a bit of an SOW. When we look backwards, there's two spots specifically. One is kind of where we are now, which is around 568. The other is a little further down around 515. And that's the area that I think is probably in view, if I'm going to pick one. And then I think that that extension could go as low as the previous top, right, when we did peak back in 2022 after the rally, which is around 480, okay? So I've got like three basic zones that I think are more likely if you're going to hit a bottom. So one is right now, and I don't think it's impossible that there's some kind of a news that changes the direction of the market temporarily or indefinitely. But I do think that what's more likely, and I know I've got all kinds of doodles on here, but I think what's more likely is that we do see a kind of rally on the S&P 500 on most stocks, and it probably will be born out of some kind of good news. Why do I say this? Well, again, going backwards and looking at like the daily and then the weekly charts, the weekly certainly has a lot more argument for downside. I could see that. The daily charts don't really. In the last maybe 3-4 years, we really haven't had anything on the S&P 500 drop below the 30 mark on RSI on the daily. Previous to that, if you look backwards even further, the last time we were really significantly lower, and it really wasn't much, was in that October range that we were just talking about. So the commonality here of perhaps some of these more extreme bottoms that we experienced, one probably being October 2022, the other in October 2023, 1 year apart, is that those are all kind of catching on a very similar trend here from the COVID bottom, right? We haven't hit that trend in our current timeline, and it is possible that we could extend down as low as that trend, and it would make sense. It would just be like essentially we're riding up, generating a new market uptrend. We need to come back down and have a bigger correction. And I think a correction is defined as greater than 10% or something, as opposed to just like a temporary pullback. Another argument might be that, well, we're going to generate a brand new one, and there's a lot more extenuating lower lows that could be had here. Not going to get into those right now, but certainly, yeah, maybe 400s if you were to talk about those. And I zoomed out and looked at some big picture ones, and they're there. I mean, it could happen. But I'm looking back, and I'm just kind of observing, like, all right, well, what happened previously during that 2008 era? And what was going on back here in 2014 all the way through 2016? It's not a short time period. This is January to January. There's a 2-year corrective phase that occurred before another market rally, and it happens after the initial correction. So we had an all-time low, well, not an all-time low, but we had a major low with the crash in 2008. The S&P 500 is not that old, but you know, in terms of the market, was that an all-time low? No, that's what I meant to say. But it was a low here, you know, historic low here. Then you have a recovery effort. When you finally get back to the tops, you have a lot of retracement. And I looked at this period, and I was like, yeah, this is pretty similar, actually. There's a massive drop in volume after it breaches all-time highs. This is back at 173 in 2013. Notice that this volume looks suspiciously weak compared to obviously what happened prior to that when everybody's buying after the 2008 crash, the big sell-off, and then everybody's buying, right? And there's a lot of similarity that could be said, even though, yes, the volume is a little different. There's a lot of similarity that could be said here. It happens over what seems to be a roughly similar amount of time, right? There's a lot more buying, obviously, in this particular time period. There's two major sell-offs. Both actually go about the same distance. But one is obviously a creek cross, and the other is a creek test. So this jump here versus the retest here. And I think both of those actually move a pretty similar distance down, mathematically speaking, which would then, again, build out this idea that this could be a new channel forming. That's historically going to hold up long term. But in both of these cases, you can see like volume stays pretty elevated on the sell-offs, but then we're seeing that drop significant drop in volume as we kind of push up past all-time highs, which are at like 480. And I see that as a somewhat of a similarity. Now, you might say, yeah, but if you look at all-time volume, this is still way lower than it was back here. Yes, it is. All right, it is. And a lot of that we can go into economics and yada, yada, yada. Like I said, there's certainly a fear of a recession. There's certainly fear of these tariffs and retaliatory tariffs, like tanking the economy. If it's not a bluff and it's not a negotiation tactic, which I think it is, and he's probably has to be willing to take him to all the way if he needs to, then yeah, you could see some serious fallout here. But on the whole, like looking back at these, this is really what kind of piqued my interest in this, was that you have these subsequent drops, and you can see they're increasing in value each time. And even if we were to drop down, let's just say the middle level here at 516, or even if we were to drop down to where we are now, you can see the increase in the drops has been going on since really this volume started dropping off right after all-time highs. This is really similar to what we saw in 2000 and, in my opinion, to what we saw back here in 2015. After the recovery was made, it seems very shaky, doesn't it, for about 2 years. Very shaky. And it's definitely doing everything we can. The market's doing everything we can. I would say the bear market, to try to kind of like get us into a corrective phase to go back down and check those levels. We think we're overbought, right? And we were. You can see back here, there's a long period of being overbought. Again, going into all-time highs, staying elevated. It's kind of got to blur your eyes, but you can see that creek cross right here. And I have it highlighted in green on my chart. It's tough. It's not easy to see this kind of stuff. Even now I'm looking at it, I'm like, I don't know how I drew that. But I think it's true. I think it's there. There's an element right here of that U shape that's going on with those extensions. It's, again, a bit tricky to see maybe on this time frame, but you can see it. And these are leading into a corrective phase. And ultimately, like the goal in mind here was to go back and probably just to go back and retest that breakout that happened when the weakness started. And that's pretty typical. And when we look at this as a series of widenings, you can start it in two places. You could start it down low in 2014 and see this as a breakdown. I like this one because when it recovers, I kind of have this little red line here. I'll make it yellow so you can see it. When it recovers, it actually uses this in combination with the top. This might be a very useful tool in the current time frame to help predict maybe where that top might end up being, where the corrective phase is kind of over. If that were to happen, then you would have a pretty decent chance of like, okay, well, I don't want that. I want down here. Sure. But you're going to be doing a lot of guesswork, you know, unless you're looking at the underlying picture here that there was a divergence, right? You would have been guessing. That divergence is pretty clear, you know, and that would have been a good place to buy into the market on the whole back in 2015, I think, or 2016. 10 years later, you would be patting yourself on the back, even if you had to deal with all this other garbage. 10 years later, you certainly would be reaping the benefits from that major sell-off, that major corrective phase. But there's another one, and that's a widening that starts really here in April of 2014. This is actually flat. And this doesn't really ever push through the bottom of that widening. It kind of hits the same points 4 times before it continues on. I don't know if you've looked into widening tops before, but they're typically very bullish. Now, if I had been back in the market at this time streaming about it, would I have said that this was really bullish? Maybe, maybe not. I don't know. You know, it's hard to say. I think the challenge would have been the volume. I think that would have been the most difficult thing. Is there's always going to be an argument if there's chinks in the armor, if you're worried about a recession, if you've got world news that's disconcerting, and then you look at the volume here, it certainly says that buyers are taking their money out, they're not holding the line, so on and so forth. They're holding it when it matters, but they're not holding it like they're not holding on to things. They're kind of selling off and preparing maybe to buy in again. see what the market does. It looks like a wait and see approach. There's not even a lot of super high volume bottoms. There's just slightly elevated bottoms. And that's what I'm thinking we're seeing right now on the whole. We've got really low volume, and most of the money I think is on the sidelines. I don't think it's actually playing right now. I think what's being played mostly is being done by retail, believe it or not. There probably is some institutional selling here, but when I say retail, I'm talking about individual investors. And that could be Wall Street. Don't get me wrong. Not everybody who's an individual investor is sitting on their couch somewhere in, Oklahoma or something. Like, of course, there's people on Wall Street who are trading for themselves as well. But on the whole, like, that's what this looks like to me. It looks like this was already kind of baking into itself on a technical level. I don't really look back at this and think anything else. I'm like, well, you kind of have to see it that way because there's really no other evidence here to suggest that this was just going to keep rallying. And when I kind of flip back and forth between the small caps and the S&P 500, and this is the Russell 2000, the chinks in the armor are in both of those charts. They look different. This looks more like a head and shoulder, right? It doesn't have that extended top period. Obviously, it really never broke all-time highs, and it barely peaked above, I think by it was like within $1. I mean, it was super small amounts, so it's basically like a giant double top, which to me is fine, because I'm like, well, good. Maybe that's a good sign, because we could have a historic cup and handle, like a real one, here. And the prerequisites for a cup and handle may seem a bit crazy right now because you're like, well, I don't want to go all the way down to 50%. But notice where 50% is on this cup and handle. It's down here around 198. Where are we right now? 202. How far away is that? $4? So you're saying that if it breaks through that, it may not be a cup and handle? Yeah. But I'm also saying that if it is a cup and handle, a 50% retracement on the greater market move that happened here would not be unusual. Actually, it can be very statistically likely. Where are we targeting with this creek cross? 198. Where are we targeting with this rise, from these previous bottoms here? Same region. That's the triangulation right there. Where are we targeting with the current downtrend? Same region. Like, everything is kind of pointing towards the same spot. And here's the good news, bad news of the day. The good news is we're already wildly oversold, right? You could say that, yeah, I don't care. It doesn't matter, Booksy. And you'd be kind of right. Like, there are definitely times where that doesn't make a huge difference. You definitely could say that. But I think it would be difficult to argue that that it's out of the question that there's some kind of a rally before that drop. Because, again, historically, we see that there's usually some kind of a reprieve before a final dump. It's very unlikely that the market just keeps selling straight down. That does happen, but it's few and far between. Most of the time when you're getting these bounces, right, these are reactive bounces, all it takes is a little bit of good news. You're going to have a lot of bulls buying in prematurely, a lot of shorts covering on these from these initial sell-offs, these initial opening positions. Then you're going to see that, okay, if it doesn't hold, guess what? We're going into a real dive. And that's when you typically would expect to go to your targets. So when I look at this, I'm like, absolutely 100% agree. These lows are possible. And I had marked it off, markets may endure a final drop holding divergence. And what I'm looking at specifically is a 4-hour time frame, not what you're seeing right here on the screen. Because obviously what you see on the screen doesn't look quite right. You're probably like, well, that doesn't look right. That doesn't look like a divergence to me. Well, it's not on that particular time frame. But looking back at the 4-hour with extended trading on, there's actually a really strong consistency. I've got RSI, MFI, and MACD on the screen here. And they're all basically the same. MACD is specifically very interesting to me because it's that cat ear setup. And it's like, if this were to drop, normally what I would expect is either that shallow S-curve to kind of fulfill. And then basically you'd have a really painful, few weeks maybe into a drop here. And then I don't think it could possibly be a full S-curve. I don't think that's possible. But the other thing that really piques my interest is that this is iterative. And I've said this before. An iteration is just a build out in itself of the same pattern over and over again. And you're seeing it right there. It's a series of sell-offs and bear flags, essentially. And this has happened repeatedly since January this year. Again, I think the writing was already on the wall in this initial sell-off and buy-up. And I actually think that's part of it. Sorry. That's actually the first one right here. That's exactly what this looks like to me. I can't unsee that. So, like, I understand that the market looks weak. I understand that it looks like, you know, it's going to be rug pulled and we're just going to dump. But I can't unsee what I'm seeing. And to me, it looks like, frankly, it looks like seller exhaustion. Like, we're just waiting for an excuse to take the market back up. But here's the catch, is that I think when you look at that big picture, it would be easy to say that you think, oh, it's done. Maybe we get one more little drop here and then it's over. But I don't think you could make that argument, because based on history, if that target's in mind, there's not been a time where even that reprieve rally, and it should be here, it's not here yet, but even that reprieve would result in just a market turn, because ultimately, like, this is a corrective phase that hasn't finished, in my opinion. So I'm seeing two things. They're contradictory to each other, but that doesn't mean that they can't both exist. One is that you're going to get a market rally. The second is that you're still not done with the sell-off. Both of those could exist at the same time. It's really a matter of, like, which comes first, right? And I think that when you look at the big picture, for me, in looking at what happened with the S&P 500, how close we are, perhaps to those final markers, especially on IWM here, looking back at, like, these creek levels. Look, there's a creek here that's painfully obvious. And that marker, that weird sell-off we had back in August, literally marks off like a triangulation, in my opinion, to where that creek is here going into March at 196. We may hit that before we see a rally. We may. But with the iteration down, with the shrinking iteration down, with the setup as it is, with this possibly being a macro cup and handle, that being a 50% retracement level, there's literally 1, 2, 3 trends pointing towards it. One's a major creek cross, right? Historic creek cross, for that matter, that propelled us all the way up to the 250s. This certainly seems like a strong probability. But here's the kicker, right? Like, this is what I'm trying to say. I know this sounds weird, but I've said it since we first kind of dropped down into this zone, that we're overextending. There's been a lot of bullish divergence in the last several months. Really all of 2025 is bullish divergent, if you look at it on the big picture, in terms of, like, what's going on here underlying, on, like, the 4-hour extended time frame, for example, and then below. The daily and weekly, again, I think you make a stronger argument that there's not as much of a divergence there, but that to me just sounds like short-term bullish, slightly longer term bearish. So I'm going to still suggest the same thing, right, that I suggested last week. I haven't really changed my mind about it. I think we're in a bit of a holding pattern, waiting for some kind of a catalyst. If that catalyst comes in, this is going to melt up. And by melt up, I mean it's probably going to go as far as 10%. I think the S&P 500 may go 15% plus. I think you're going to get a massive kind of covering and melt up, but I don't think that's it, because I think that, again, sets you up for what would then be a much bigger bottom. Well, what makes you think that? Because this happens pretty much every time the market comes down, is that you're going to try to test low, see how low you can get, and then you're going to get a major reversal before you have a distribution and sell back off again. It's typical distribution. All right. Well, it's a knife, Booksy. You can just keep dropping. You're going to end up trying to catch a falling knife and get cut. Perhaps, right? That's definitely a possibility. And if you try too hard to predict these kinds of things, you could be in pretty serious trouble. But come April, May, if this has happened, and anything like this has happened, come April, May, if the market's in this position, it's in a very unique position that it's really only in maybe once every few years, typically, although we've had a pretty crazy few years in the market. And that is a position of really rally, long-term rally, because if this were to happen and that correction takes place, you're talking about historic bull rally after that. It would be a nasty corrective phase. It would be a nasty bearish phase. But if this doesn't go, and I'm talking about if-thens, right? If this doesn't turn into some kind of huge market recession, this genuinely, from the standpoint of a technical trader, should result in like a rally that's roughly the equivalent of the original bottom of the bull to the top. And it does seem to be supported by a lot of trend lines that this could be going to like near 300. So you're talking about a rally that, yeah, this nasty sell-off period that's painful, you're talking about a 50% market rally. And I'm not seeing this on like one thing. I'm seeing this on like a lot of things. So there's a lot of different opinions right now about what's going on in that market. To me, this looks like a divergent wedge, so to speak, on the 4-hour on all the indicators. It looks like a shrinking iteration on all the indicators. What's missing is, again, that we are not getting like that kind of reprieve pop that we normally would get. And I think that after that, typically what we see with these waves is that that's actually when you get the final. It's like, so it's almost like a left side, right side. You keep making the left side of a wave, but you haven't made the right side, which actually is the right side is the one that kind of builds out and holds it. Instead, you just keep making new left sides, right? And so that wave is building out, and this is typically what we see is that first pop is actually a fake out rally. It's like the right side of the wave that's starting to build out. And then the second pop, which again, as an iterative motion, you could see why. That second pop would be building back out towards some of these early iterative motions, which were quite large. That second pop would be a major rally, right, to the upside. You can see it visually on my screen on the MACD pretty easily because I'm drawing it only on there right now. I'm going to try to like highlight that a little bit better, right? Now, what if this is like a, worse than that, Booksy, and it goes down low? Well, what if? Like, at this point, it doesn't really matter. Like, there's two possible creeks here. I've got both on the screen. There's two possible intersection points as a result. I'm thinking one is going to be a top pivot, and that's what I'm thinking about March 31st. As a top pivot is most likely. So it's going to actually reverse before hitting the bottom or right as it hits the bottom. That we'll double bottom later. And then we're going to see a top pivot probably going into March 30th, essentially. Because there's two pivots on all of these different indicators, and they're not completely distinct from each other, but you get what I'm saying? Like, they're there. And I'm like, yeah, it makes sense to me that there would be a push up and then a drop back down. And looking specifically, again, at something like MACD or RSI in this case, you can see it pretty clearly. Like, this is the end of the distribution. This would be your M1, but we keep making the first wave. We haven't made the second wave yet. There's 1, 2, 3, 4 iterations of the first wave coming down here. The second wave hasn't built out, and so you can see how this pretty easily turns into, we get a big push up. Maybe it doesn't quite get overbought, doesn't quite break like the bigger creek. Outstanding. This is very typical for waves. But then we actually go into like a nosedive. So using like RSI, for example, right here, this is what I would expect to see, is like that wave would push out and then you'd end up with a bigger drop. And I think this one has got the potential to drop to the lowest low that we're going to see. And that would be going into mid-April. So you guys got to do you. You got to do whatever you think is right. This has been something that I talked about a long time on AMC. And I know that a lot of people don't want to hear about, for whatever reason, they don't want to hear about IWM. But IWM, which is your small cap ETF, guess what? That's going to define a lot of these smaller companies. And GME and AMC are not huge companies by Wall Street standards. We talk about the Russell quite a bit when we talk about them because they're in the same kind of basket overall in terms of market cap. But when we look at this picture, I see the exact same thing. And we had talked about this on AMC for quite a while. And the bigger question last week was, where did that go? Where was that move? It was just like not there. it didn't make that move. But you can see the layups are happening, right? And we're lacking kind of that last push up. If this is and I think it is, if this is like a macro wave, right, and this is like a middle, right here in the middle being about January, right, when this sell-off kind of hits its stride, AMC's already coming down. It started early, about a month early. This could easily be seen as like a cat ear 1-2. But even in that 1-2, it's missing, and it's pretty obviously happening like from a timing perspective. I can't fudge it, right? I can do whatever, to try to make it seem like it's this or that. But in terms of where this like jumps up and crosses like that first and returns to that first creek or the second creek, there's only a couple different possibilities. One is essentially it's starting this week on about Wednesday. The other was out here again at the end of March. Very similar to what we see on the IWM, which is the Russell 2K. When I look at this without these kind of bells and whistles on the chart, that's exactly what I see, is a series of iterations that does absolutely threaten to just kind of pull the rug on you. Don't get me wrong. There's a real risk here, okay? If I don't say that, then someone's going to think that it's a guaranteed surefire bet. That's not the case. But just like we saw here with this sell down, right, it continues to make lower low, but the market is actually already kind of turning up and getting ready for a rebound. We're seeing it again, but this is happening in like a compression zone right here. So you get a really similar setup, but it's making that higher low. It's already kind of jumping up and over. It's essentially, this pattern by itself does not look like the pattern on the left. But if you read between the lines and you look at the actual creek jumps that are happening, this is already an early adopter. This happened before, or I would say before and kind of as, it was very, like, I don't know what the right word is. It's kind of like right before, but it was sort of delayed on price action. The RSI had already kind of made adjustments and was heading back up and jumping over, but this particular creek jump didn't actually take into effect until that 308 level, which was right around here. You see that? And that was on February 25th. But that, we weren't out of our creek, we weren't out of the woods yet, so to speak, until that 308 level on that Thursday, Friday, and then it took off to the upside. Well, technically RSI had already made the move out. The way I have it drawn, it certainly looks like that's not the case, but this is a little high. And if you build it out as far as you can, then this actually didn't break out, kind of got in a weird spot, because this line was probably drawn on a bigger picture. This is a giant arrow. This didn't actually break out until right there. But the RSI had already crossed up and was building a support when that happened. So you can see like there was a really strong, because I remember I joked about it, I was kind of frustrated. It was a really goofy looking chop along that creek. If you draw it really precisely on the smaller time frames, it was like right along that creek, you just would not jump it. But it had already jumped on RSI, it was already moving forward. Well, this isn't, I'm not trying to be like overly hype here, but like this has kind of already happened in much the same way. Like RSI has already made the jump here, and it is possible, as we've seen before, that you can have kind of like that middle that still dumps. So you got to keep in mind, this is the risk that's very real. It's like, well, yeah, but this is smaller, right? And it's also higher up. You have more room to drop. That's true, except that it's also iterative, and as you can see, we're already at this place where, yeah, we've double bottomed and we're still compressing. It's basically building out to an either or situation that has extreme potential for a pretty massive quick rally if there's a catalyst. And frankly, if this comes back down and lands on top of it and it can hold, it's essentially just like what happened back here, albeit on a slightly different setup. So even though, yeah, this looks kind of bearish, not going to lie, there's definitely some issues with what's going on here. It has jumped the first iteration. And if it continues to jump iterations, then the next one up is up here at 350. And then the next one up is up here at 380. Like, if I were to draw out those iterations, I would suggest to you that it would push up to roughly 338 340, and then it would push up again after a sell down. It would push up again to like near 377. Does not mean that it's necessarily going to go all the way to 426, but if we keep building out those iterations, that's where that door opens up. Like, yeah, you could have it rally really, really far. This could definitely rally all the way to that 426 level we looked at initially, at least $4. I don't think it's quite the same. Like, I see a lot more weakness here in AMC's build out than I do in the greater market in terms of like a pop. So you're down 1.5% this morning. You're probably thinking more of the same in the market, and it kind of is to some degree. We're in a bit of a stalemate. The short term looks kind of bearish because of certain lows that were made, because of a failure to jump the creek. It definitely looks bad. And when I was looking at the Russell 2K this morning and then looking at AMC, kind of felt the same way about both. It's like both of them went into like this upward push. It didn't quite make new gains. It didn't push above the creek. It's like in a holding pattern. It looks like it's getting knocked down again. It made a little bit of a weakness here. So you're like, well, I guess that's that, right? All it's going to take is like a hook. And this could potentially just dump off the face of the earth. Yeah, it could. And this is a real possibility here. Again, so I don't want to sugarcoat it and make it seem like it can't go down anymore. That's not what I'm trying to say. Locally, that could definitely happen. But on the big picture, it's kind of exhausted. It kind of looks like it's at the place where it needs to be. We're really only a couple dollars away. $4 is like nothing on the Russell. It'll probably feel like a lot if you're holding on calls or your shares or whatever, and you're dealing with a corrective phase. But it's the same deal with AMC. We went into this like bottoming iteration and just didn't go anywhere. And we actually laid up on top of it and did this backup, and now we're building again. And again, it could be perceived as like a 1, 2, 3, 4 top that's going to dump, and I think it might. That's what I've actually got on the screen, is that, yeah, totally. But if this is crossed up, then it's a different story. So the thing about the cat ear kind of stuff that I talk about is that it's not one size fits all. A lot of times when people hear it, they're like, it's always distributive. Well, yeah. I mean, if you're comparing it to Wyckoff and you think that the cat ears always are signifying this particular diagram on Wyckoff, then yeah, you probably think it's always distributive. It does look that way. When you look back and you see those like ears appear, you're like, it's bad. Yeah, but the reason that it's bad isn't because of a pattern that's just a visual pattern. The cat ears themselves are built up of different parts. This is just a wave up, wave down, wave up, wave down. And the parts that matter the most are what happens really in these last bits. Like how you interact with, do you have any sign of weakness? Do you have an up thrust at the end? Those are things that really, really determine what's going on here. Because at the end of the day, that exact same pattern could be used in a wave cross to the upside, and it's no different. Why? Probably because the market does run on a lot of computerized algorithm tests and junk of liquidity. And I have seen plenty of times, this is what's been going on, what I think has been going on anyways in the market. We've seen this plenty of times where that cat ear does result in downside, but then it does it again. And it's like a series of LSPYs until you get to a place where you're like, oh no, it's going to just knife and keep going forever and ever and ever. And sometimes that happens. But if you have a change of character and one of these goes the other way and crosses that creek, suddenly you're no longer in that left side, left side, left side, left side. You're not in a left, right. And that's what I'm trying to suggest is like, I think that the market is kind of deceiving us into thinking that we're going to continue to go down indefinitely right now. You guys are like, well, yeah, but you could be wrong. Sure, but that's all this is. It's just charting. You know, you're always going to have a risk of being incorrect. It happens. But you have to just chart what you see. And this is what I'm seeing is that it looks like to me it's building out a right side. And that typically to me is like, okay, it could still go down again. So I'm going to delete some of this stuff. It looks pretty close to what we thought right here. Oddly, this was back on, I think Wednesday we doodled it. Something like that. This looks really darn close when you look at it like that. But it did have a little bit of a breach here, like a lower low. And I wouldn't be surprised if that's actually where we're kind of seeing that right side tease out, if you will, the both buyers and the sellers here. So if this goes into like a head fake, this is what I would expect, to come down low and go ahead and get either near or at that gap fill. I think you do make a new low here, right? Based on what I'm seeing with this, I think it's easy to argue. And I had thought that before, like we might still make a new low before pushing up. It's very possible. I can see it right there that there was a little bit of a weakness that dropped right before we jumped the creek. And that to me would indicate a possibility that this isn't quite done yet. It has made nothing but higher lows since then. So you can't rule out the possibility either that it just doesn't come back down. But I would suggest that the triangulation here does look quite right with that target that we had in mind for Wednesday. That Tuesday, Wednesday, if this were to come back down, so if you get that breach here and then it comes back down, you might say, oh, well, that's weak then, right? Potentially, but remember, left side, right side. This is left side all the way. This right here would then be, my assumption was it was going to be a right side, like it was going to build out. And that's what happened going into Friday. So in looking at a wave cross, that's what that is. It pushed up and then it jumped over. Yeah, but maybe you're looking a little too micro at it because we could be in this situation, yada, yada, yada. Yeah, and I'm conceding that. I am. And I'm actually suggesting that that's probable even, that this is still going to have like a right side that has a potential drop involved. But the good news here is that that iteration, if that's the case, would be basically finished as far as I'm concerned here. Now, if I'm looking too closely at things and you zoom out, this is where you can get to the bear picture, the bear thesis of like, and I do have it on the chart, of like, oh, well, you could get like a more terminal move here still. If this sets up incorrectly, so to speak, and it doesn't have another breakout after this first wave is done, because this, again, if this is a right side and it doesn't break out, who's to say the next right side doesn't break out? Good point. And then you're in a loop of just nonsense where you're just talking about iterations and none of that matters. And sure, you could look back at this and suggest that this is some kind of a, an S-curve down on a bigger picture and it's going to go to 262 or something like that, or 250. There's plenty of arguments to be made that this just continues down. I get it. But if you missed what I was saying before, it doesn't really fall in line with what's more likely here if there is a cross up and over on these smaller iterations. What's more likely here is that you get what seems like some kind of a massive squeeze moment. It probably, again, is short-lived, like not going beyond the end of the month, in my opinion, before we finally take hold and really take the market down. But it's a major reprieve that's much needed. So oddly enough, seeing AMC is almost like a bit of a front runner here, because in a lot of ways this move down does signify, yeah, we've kind of made some efforts to try to turn the stock around, so on and so forth. At this point, you might say, well, yeah, okay. All of that I agree with, Booksy. It certainly seems possible. But if you're wrong and it's just the same thing building out larger and you're distributing, then what's to say it doesn't just pop up like you said here to 310 and then dump and continue to dump? Well, I'll tell you, when you look at things like iterations, you have to pay attention to things like double bottoms, higher lows, and lower lows. And if this iteration is to be trusted, and I think it is, it doesn't matter whether you think this is all the iteration right here, or this is all the iteration right here. Neither makes any difference because it didn't push to lower lows. So regardless if your scaling is off, in this particular case, this is a benefit for us. Regardless if I'm wrong about the scaling of it, okay, I'm wrong about the iteration nature of it. It really doesn't matter. Yes, there's a bit of a weakness here in that it found a support, tried to advance a creek, failed, and then moved to a lower low. That's a little micro SOW right there. It looks like it could be pointing down to that 292 gap fill. Sure. Which makes sense to me. Get the gap fill, have a big reaction. Okay? Maybe that's kind of an ace in the hole, so to speak, for some of these institutional players is like, well, there's always the gap fill, right? If we need to enlist some buyers and sellers, going for that makes perfect sense because it's expected, right? And you guys are like, what gap fill? We never filled the gap, right? We bounce on top of it. The gap goes all the way down to 292. Okay, so we've been kind of skirting around it, not quite getting there. But either way, the difference is palatable right here. Like, it's easy to see, easy to digest. Like, it's clearly not made a major sign of weakness yet. Instead, it's just made a higher low. That's different. That's different than what happened up here, even with just a double bottom versus a higher low. It's different when you look at the big picture and you consider the fact that where we are currently, sure, there could be a sell down, but it's also jumped some creeks, right, that we hadn't previously gotten above. So I look at this as kind of not a catch-all, but it's sort of like almost like a thermometer for what's going on in the market as a whole, is that there seems to be a desire to kind of leave some doors open for the possibility of a local flush here, right, that then builds out into a rally that then builds out into like a major drop. And I'm seeing the same thing on the whole. GME is probably, unfortunately, one of the weakest examples of that right now. It went from like being one of the strongest to being one of the weakest, in that it developed an SOW here, and then it did come back down and push back through 24 again, sort of end of the day, like second half of the day on Friday. Unfortunately, just like some of these others, we saw this on, like I was talking about on IWM with the middle, like it didn't breach 206, like it came back up, it tried to go, but it didn't breach 206. GME did the same thing. It came up, it tried to go, but it didn't breach 2430. Very micro by comparison, but very similar to what we saw previously on the last drop downs. And there's been, again, multiple of these, right? And I was saying, again, iterative is the word of the day right now for me, because I'm like, yep, it's pretty much what we were expecting in terms of iterations, except for this, which is that, again, the iteration did not fulfill what would be considered a change of character, in that it didn't drop lower here. See how it made a higher low right there? Problem is that on the bigger picture, and that just happened on Friday. We didn't cover it. I wasn't on Friday, but slightly higher low here would be considered bullish, except for the fact that, again, this is problematically still going below 24, which is a previous, so it's kind of like a double dip low. And then by not jumping back over the middle at 24.30, you're basically just going back up and holding that resistance. So you can see there's an attempt twice to jump the creek. Once was on Wednesday, pushing up to 25. The second was on Friday, pushing up to 24. In both cases, they're met with sell downs that push back below the creek. So even though this disc does have that same kind of layup, unfortunately right here where the layup looks like it's going to try to change, I don't know how to put this except to say, again, I think that the buyers just kind of stepped aside, and what we're seeing is kind of a natural inclination of the market to be like, we're tired of this selling, we were ready to go back up, and there's just kind of a let go here, and it does push up quite high, and then immediately gets sold back down. I don't think this is institutional shenanigans. To me, it looks like nothing. Like, it looks like there's no volume in it at all. To me, it looks like, again, money is on the side. And this to me is like more of a natural reaction right now of like, we really just want to go up. Like the market is waiting for some kind of a catalyst to stop this bleeding. And you might say, well, yeah, but in a bear market, bears are in control. So are people really wanting it to go up? Just remember that that's true for every market, right? If you have weakness with buyers, then you start seeing those chinks in the armor, then you know that the sellers are kind of stepping in. They're always there waiting, right? They're waiting for the news. They're waiting for the moment when the tide turns. If somebody thinks that this deserves to go down, that's what they're going to be looking for. If they're getting ready to enter a short position, that's what they're going to be looking for. And the same thing applies to buyers. They're going to be looking for that moment when is this done? So just because bears are quote unquote in control does not mean that there can't be a turn. Just like when bulls are in control, that there can't be a turn in store. It's very normal, all right? And that's really the nature of what we're talking about right now. So I think this let go just indicates like, all right, the market is letting go. It is building out in a way that to me looks like, yeah, I think the market wants to go back up. And by that, I just mean the general population. And probably, again, your bulls being like, kind of sick of this sell-off. It's low enough. It's been oversold forever. How much more we're going to have to do? Well, again, if the market is taken up, it's probably, again, would be initiating some kind of a sell-off. Now, you might say it's different for GME because GME's in this squeeze moment, or in these squeeze plays. It's not the same. I don't agree with that. I think that on the whole, the probabilities here were pretty straightforward. When we looked back at this in maybe February, about a month ago, and we talked about what could possibly happen here, there really weren't that many options. It was pretty straightforward. At the time, I said, well, you could come down and make a higher low, or you could come down and you could make a spring, right? And if it makes a spring, it has to come back above 2450. Well, where are we having trouble getting back above right now? Right now, we're making little hooks, and we're struggling to get back above 2450. All right, that's the bottom level that was established. It's the previous top from way over here in October, yada, yada, yada. It's pushing down into that lower liquidity. That's the nature of a spring. That's the nature of a breakdown, okay? And a spring is a kind of breakdown at first. It always is. The other thing is like, well, how low does it go? Well, that's another question, right, that we could talk about. But one thing that we identified back here was that there was a really clear intersection between $24 and earnings. And we had talked about the possibility that this doesn't actually go anywhere until earnings, which is around, I think, the 25th, 26th. And when you look at that on GME, it does make it feel a little different because you're like, well, it's very possible this could bleed down as far as the last big parallel, be super low. We could come back to the original starting point here, like 2050. But we had identified that there was a likelihood it comes back down to 24. And that was something that, again, I know I have all these little lines on here. It's probably not super helpful right now because it looks like a million different things. But really, when we were talking about this, we were talking about 3 zones and 2 major zones. One is up here around 30, and the other was down here around 24, around earnings. And that's kind of it. And it makes sense. You look at the build out for this range, that would be what you would talk about. So here you could have an early potential jump. But I mentioned, this is kind of something that was interesting to me, is that even if this came up here, this could technically still drop all the way back down to 24 by earnings. So even if it had a pump, it could still dump back down. We're kind of in the same boat. We're like, you can see how that pump might still happen. I don't think it would necessarily dump all the way back down in this particular case if it does it at this point. But very similar, like in that regard. If we've come below the floor, right, and even we make that drop and then we react strongly, maybe it doesn't happen until earnings, right? I don't know for sure, right? But it certainly would be on par with what we see from a technical standpoint where these are triangulating. This downward motion is triangulating $24 on the dot on earnings. That's not an accident, in my opinion. Like, that's a very clear evidence that there was a creek trajectory, a double top right here in place that targets $24 on earnings. Very, very simple. Whether you're on top of that or below it, whether you're breaking out or breaking down, that's really the more of the bigger question here, right, that we were trying to answer. But that was already in store. So when I look at where we are now, I'm kind of like, yeah, we're sort of in the right pocket. We're where we expected to be at some point going near earnings. We didn't make any kind of push up. But again, like what's going on big picture here probably shouldn't be ignored, right? Which is, yes, we are creating sort of this distributive action is what it looks like. But there's really not very much room to go down. And even if you did have a sell down, a drop of a a drop of a feather, it's going to melt back up. And I think that again is based on what I see as iterative motion down that's kind of shrinking and compressing. And there's no question when you, even on this chart, when you look at it, like take these two into consideration and just be like, yeah, is that possible that this is 1, 2? Sure. It could just be 2 iterations, right? If you want to make that argument, it's not 3 or 4. But even that, it's like, yeah, but it's really compressed. I mean, the same motion's taking place, sure. It's going to go one way or the other pretty heavily, but I think that based on what we're seeing overall, there's not that much room. So I'm kind of in this, I almost didn't want to get on today because I feel like I was going to repeat myself a lot, and I kind of am. But I'm kind of in this wait and hold and wait period where I just feel like there's not, to me, it's not like a simple as, oh, it's about to go up and then keep going up, or it's about to go down and keep going down. I think it's pretty straightforward if you look at it as 2 particular kind of flushes. And I think there's a possibility that we still need to continue to flush down, but I'm curious to see if we do get past 200 at this time, for example, on IWM. The fact that we made a higher low here is kind of interesting because it is possible, although I think it would be really obnoxious if we jumped up and did it again here. You're like, well, great, we're just more of the same. Yeah, I know. That's the holding pattern, right? The thing about iterations that is probably the most frustrating is that you're doing the same thing over and over again. You're getting this series of repetitions that kind of turns into a headache. If you want to trade it from a swing stock, to swing it, scalp it, you're probably going to be a lot happier than if you try to kind of time a bigger move up or down, because those up or down moves are not giving you what you expect. Every time this thing dropped and knifed, if you were expecting it to come back down, you would have been disappointed. Every time this thing popped, if you expected it to continue, you'd been disappointed. And that's the nature of these massive chops here. Like this high volume, high volatility, certainly smells a lot more like distribution than accumulation. But to me, it just kind of indicates a level of uncertainty in the market right now. And the fact that, again, one of these sides wins is probably going to be pretty violent, So yeah, is it possible that this is going to do it again and then have like some kind of bigger sell down later in the week? Yeah, we could be in for another red week in the market, and it would be really frustrating. I get that. But I'm saying that right now, I think as far as we can tell, the door is open, and even though it may not seem like it's open. I watched Stockfather's video, and you should check it out. It's always good because he's very straightforward when it comes to like this stuff, and I think that's really important. And his assessment was very clearly like, this looks really bearish, period, for the most part, right? And so for him, it's like, yeah, this is failing to advance. It doesn't look strong. It doesn't look like the previous bottom. And I'm suggesting that he's right, but he's also kind of wrong in some ways, because there's a nature of this that, yeah, he's right that it doesn't look as strong as the last bottom, in part. But I think he's wrong in that there's not any kind of change yet, that it's still like just going straight forward in a bearish direction. I think it's building out in a way that certainly looks like that on the price level, but I think underlying, there's a lot going on here. It's like a duck on the water. There's a lot going on here. And I think that what we're seeing is a bear market that's trying its best to kind of take hold and get to the end. And it's going to take very little to pull that rug, go the other way really quickly for some relief, after which point then I think your bears have a much better chance of enlisting more sellers and fear and driving the market back down for real. And if I were to look at this with that in mind and suggest to you that, either 1, 2, 3 of these could be true, and I think any of those could be true. I've got like 3 markers here. I really don't think it's very complicated. I'm very doubtful that the market rallies and just goes into a full-on, massive move to the upside or something. But I'm not at all confused by this particular idea that this could pop up and then drop down again, because the nature of a cat ear is to be iterative. The nature of that second ear on the big picture would be to look like everything else. What are you talking about? I'll repeat it once, And then I think I don't want to like keep beating a dead horse here because I know that it can get kind of tiring to folks. But look, when you talk about the cat ears, I've mentioned it before, and I know it's going to be like another obnoxious thing for people. I think it's important just to understand it because the way the market works is it works in repetition of pattern until it can't anymore. And that, I think, is just the nature of the market. It makes sense. If you're doing the same thing over and over because it's a behavior, right, until you can't anymore. I'm just going to use one. You could do a bunch of them in here, right? You can go indefinitely. But the idea should not be lost on you that this right ear isn't like this, right? Like we draw it like that because it makes sense to us. But if this were the case, then you'd be looking at it probably incorrectly, right? If you just keep thinking it's like ABC, 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 ABC. And that's kind of what I'm saying. Like that iteration is there. I'm arguing that right now. I'm a man of contradictions, I suppose. But in reality, what this signifies is it signifies a nesting. And this is where I think the significance plays into it, is that nesting that's actually occurring is actually building out the larger picture, right? So here's what I'm seeing right now in terms of that regard. Notice that this particular motion, and we talked about this previously, this didn't really seem super complete to me. It's possible that it doesn't go any further, and we talked about that. And that's why I was kind of getting worried about 367. I was like, man, I don't know if we're going to break 367. But if the nature of this is all just left side, left side, left side, then we're kind of missing the point. I think this is an interesting point to make, right? Because notice that what we were talking about right here, coming down, that little area right there, I was drawing a comparison and saying that this particular region, so now we're kind of going back on another layer of this, getting a little more in depth. And we were drawing that comparison to right here. That's what I was just saying. But again, you could look at that as if it's like ABCD and then it repeats ABCD but smaller. But that's not quite right because iterations are nested in themselves. So if you were looking at that from a very basic standpoint, that's an easy way to understand it. And I understand that. That's why I usually say like, hey, this is what the iteration is doing. But in my head, I'm always thinking to myself, yeah, but if we're seeing a smaller iteration of what looks like a bigger iteration, then what that does tell me is that we're probably nesting a second ear. Because usually that's where you see the most repetition. And it's weird. There's a lot to it. But this is essentially like a head and shoulder outworking of whatever buy-in happened right here on this side. And so it's the wave up, the wave down, and you're going to see wave up, wave up, wave up, wave up, wave up, wave up, and then you'll start seeing the down, 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 down. And that's what gives you that traditional four-top look. It's really fascinating if you care about those kinds of things. My understanding of it may not be perfect in that, I can look back at this 10 years from now, and I'll probably be like, well, I don't know what I was thinking. This was clearly doing this because I have a better understanding of the market mechanics and all that stuff. But from a visual standpoint, that's the best way I can describe it now, and I think it's correct. It may not be that I'm defining what's really going on perfectly, but I think that from a visual standpoint, it's correct. It's like an understanding of the sun setting and the sun rising. From a visual standpoint, you're right. Something's changing, movement. Right? You can see it. You know what the motion is. You start developing a calendar. And then later you find out that the sunset and the sunrise is not a real thing. It's just the earth spinning around. And you're like, why do we still call it sunrise, sunset? Because visually it makes the most sense. We understand mechanically that it's not what's going on, but we still say that, right? Because it's easy for us to understand it. And I think that's kind of what I'm getting at here, is that I may not be perfect on my understanding, but visually I think it's still correct. And so what I'm seeing here is that that's a repetition of iteration, which would tell me that this is the middle of 2 years and that this is the middle of 2 years, which would imply that we are kind of in this situation of like, oh, well, we're probably in a bit of a nested formation, like a middle of the road kind of thing. And what we're trying to do is build out into what will be, again, in my opinion, what will be like a final representation here of more than likely like a distributive function. In this particular case, based on everything we know, not indefinitely, not forever, just until you get that bottom and then that rally. Then the market's going to shift. This would look really familiar because it's basically the same thing I'm arguing over here, even though, no, we're not talking about like cat ears as much over here. It's really very similar. Like you're missing kind of a piece here of let's follow through on this iteration and then we'll see that bigger low because all of them are going to kind of finish right in this little pocket as we complete the right side. Except for what? The biggest right side. Guys like, what? The great thing about iterations is that they do keep going, right? And there is a nature here of like, well, I mean, this doesn't just stop, does it? No, it doesn't. And this is where you might get a little lost and think, I don't really care about this. Just tell me if it's going to go up or down. But hey, learn to do it on your own, right? And you'll understand what I'm saying. This is where all of a sudden you look at this and you're like, well, this could be its own wave, couldn't it? Yes, it could. And this is the biggest problem that I have with, and I've mentioned it before, but this is the biggest problem that I have with fractal analysis is that it fractals by in and of themselves, by definition, if you hear somebody say they do fractals, but they don't talk about iterations, they're not doing fractals. They're doing like bars patterns or something, and they're creating like stagnant patterns that are coupled together. That's not what a fractal is. It's not. They should not use that word. I'm not just talking about semantics. I'm talking about in practice as well. They should not use that word because it is semantic, but it's also mathematical. Like this is a fractal. It's building out a pattern that you see on the big picture, but it's built up on the small picture. And you look at like a snowflake or something, and it has these beautiful geometric patterns on the micro that when they're all connected on the macro create the same geometric pattern. It's fascinating, right? And those are the ideals of fractals. The reason why it's used in the market is the same thing, is you're seeing that the smaller behaviors build into the bigger behaviors and vice versa. It's all kind of looping back to itself. So here's the great thing about all this is that you get to these kind of moments of like clarity and you're like, okay, well, let's say this is a trough between waves. It could be. This could also be a trough between waves. It could be. Well, at some point, that trough is going to finish, right? Yeah. How far does it go before it finishes? I don't know that perfect answer to that question, but I can say that usually at some point, we're going to see that if this is a four top, we're going to see all four pieces, like pretty clearly. Meaning you're not just going to get one pop, go sideways, and then drop. Not typically. That's pretty unusual. Usually you're going to get one, and then this is actually the build out of another. So let me go ahead and delete this stuff. I like this stuff. I don't think this is bad. I'm just going to delete it for now so you can visually see this a little bit better. So if what we're experiencing looks like it's going to break, and this is another reason why I'm thinking that even if it looks like an iteration and it looks strong, that it's not just going to reverse and go all the way back to $20, okay? That we're missing here the outworking of the rest of them. Because again, let's say, for example, you like the ABC stuff, and you might. I'm okay with that. As long as you understand it's nested, I don't think it's wrong. As long as you have an understanding. That is the ABC, that's the ABC. You're missing the next one. Well, does it have to even go beyond $3.30? No, this is what we were talking about. Like, it could potentially stop short and just not go there. Why not? Well, there's a lot of reasons why you might do that. One of them could be that the market's not ready to go. The second could be that because the market, it's kind of paired with the first, because the market's not ready to go, it doesn't want to break like a major creek. To this, we have an advantage because our major creek is way out here. It's like way out here at like $4. Would it break a local creek to do that? Yeah, it would. Would it break a major creek if it went up to $4.10? No, it wouldn't. So I don't see it as a great risk if it does this. but you just never really know till you see it. So you have to kind of wait for that confirmation. Sometimes it looks strong and it's actually kind of weak. So if this were to do the same thing again, and let's say the market doesn't get its good news, you might see it do something really similar and just keep building out here and not breaking out until finally at the very end, it's in a pocket. And yeah, this is a bad kind of a pocket usually for us, because usually this kind of a pocket indicates that there's really no desire to continue back up right now. And that would be your breakdown, right? And then you start seeing a capitulation down to whatever lows you're going to get to, okay? Totally normal. This is what happened to us on the big picture going into the Judge Zern decision. We got the iterations, we kept iterating out, but we failed to ever make an advancement over some of those initial creeks. It is possible. There are other situations where that doesn't happen, in which case you're basically it's insinuating a change of character. An example of that would be the 2020 jump in November. Those iterations started to break up and over, and they go quite high. And that's what I was expecting to have happen here, was that we would see that slight change of character, right? And that those iterations could go quite high. They could even push above previous iterative tops, at least to the point of getting you back to this kind of middle range. All right, well, what would that look like? Well, it could be very similar in that you're still hiking the price up, but that when it does the next iteration, it actually hikes the price up again, then it does the next iteration and again. And this is a rising iteration the other way. Okay, now you might say, well, then that should be bullish, right? Well, in theory, I wish I could say it was, but it will 100% depend on, and this doesn't usually happen, unfortunately, with us, with AMC, but it's the same motion, right? But it's building out upward instead of kind of chopping slow and low. And in this particular case, it's still the same thing, like the four top, right? But it's iterating by breaking out, breaking out, breaking out. Seeing early signs that might be happening right here based on this really small guy. That's a right side, didn't drop to a lower low. If it can push up, you get another right side. You might get some really nasty sell downs in the midst of this. This isn't just straight up, but you might get some really nasty pullbacks because, at least as far as this first iteration is concerned, it came up and over, but had a really nasty sell down. This would be like us coming up to like 338 and then dropping all the way back to $3 and then going, right? It's like, whoa, whiplash. Well, yeah, but that's kind of what the first iteration did here, is it did push out and over. It looked really mild at first, and then it just pops, but it ultimately drops really low. It makes a slightly higher low, and that's kind of what this does. This should seem very familiar because we did the same thing back here where we were breaking out and up. We kept making very little in terms of gains, but each one of these is a creek cross. It's just that the backups are so severe, and it maintains that all the way up to the top. The backups stayed severe until they finally reversed, and that's, again, volatility, right, brought about by a distributive nature. This kind of thing might be very much the same, where you have big push up, tries to go beyond 330, doesn't quite make it, drops back down to like 3. Goes below what would be seen as a traditional bottom at 316, like it doesn't hold support, and then it ends up holding higher and then does it again. Well, why would we think that might be the case? Maybe if the operators were letting go here, and this is kind of the way the market's moving, they're going to let go here and then sell it back down, let go, sell it back down, because they're still distributive. Like if they're still bearish, they can let the market fly on short covering. They can add a little bit of water to that grease, right, and start a fire. But they don't need to do very much to get the market to kind of melt up. Then they have the opportunity to just sell into that weakness as the market's going up, and that's distribution. I'm getting rid of my shares because I'm expecting it to go down again. So if you see something like that, it is a sign of probable distributive action. If you see some major flushes like that then still continue, how am I supposed to trade this? I don't know if you can trade it successfully on something like AMC, to be honest, because AMC typically will crush you. If you're just trading shares from 3 up to 4, you might be okay. If you're trying to trade options, it's going to be tricky. You'll have big bursts where that that's going to look like really positive, and then it's going to squash them. And then you'll have a big burst where it looks positive, it's going to squash them. And I can't give perfect financial advice ever, and I really am not authorized to do that anyways, by legal standards. But I would suggest that hot potato hands is probably the best course of action if you're going to try to do options. You don't hold them very long, probably not even overnight kind of thing. You trade in, you trade out. You find a starting point, you find an ending point, you trade that, then you let it go. Find a starting point, ending point, you trade it, let it go. When it gets to this point where it starts pushing up over this top, this is where things are going to get really interesting, because you will at some point more than likely start seeing, again, the chinks in the armor appear. What is more traditional in this particular regard would be that you'd have some kind of a long-standing breakdown. You'll see like a widening, for example, that starts losing its steam, but it's still going up. And you'll be like, well, why is it still going up? It's still pushing. It's still pushing. Well, it's actually already broken down. It's just gasping, right, to try to get to the end. We may not get past $4. That was never a guarantee. I'm still talking about $4 because I still think it's probably going to try to go there. But mostly because I think that we haven't retested this top, and I could definitely see this as like kind of a bait and switch. Like we're going to start moving that way and then swap the other direction. And it wasn't employed here. There was a delay. And I don't think a delay necessarily means it's not going to do it. I think it just delays. And that's what I'm seeing with the iterative motion. So we'll probably see that push up and build out. But this is where it comes back to the bigger diagram. And on AMC, I think going up to 4 is fine. But it would probably be, again, if it's on volatility, probably be distributive. And at the end of the day, more than likely, what you're experiencing is something more akin to this on like a rise. Yeah, but this doesn't normally rise, does it? It doesn't matter. Again, what happens before the end often is just determined by where we're going. An example that's pretty easy to see anyways is going back to the 2021 breakdown. If you were just focusing on, and that's a long time ago, I know. There's other breakdowns we could talk about. But if you're just focusing on like, where is it going to go, right? You'd probably look at this and think that this was pretty strong, and you wouldn't be completely wrong, right? Because you're like, well, this comes up, it makes a higher low, and then it comes up, it makes a higher low. Yeah, it does. But it's also struggling right now to hold this level, as we know, looking back at 2021. What I'm getting at is like, this is like the middle here. You see that? I think you do. I think you guys are smart enough. I think you see it. And if you look carefully, you can actually see the same kind of middle formation that we're talking about right here, that we're talking about locally. And if you look carefully, you probably see that same formation happened here, right? And then it starts moving back out. And then eventually it gets so small and compressed that it's like ridiculous, right? Why even bother tracking it? Well, that's true. It's the same motion, okay? And during this motion, the question you should be asking is this making weakness signs? And it is. And ultimately, these weakness signs are pointing towards where we're going to go later. But in the meantime, where do we need to go test? And this would have been the question back then. And I think that it's still the question today. But the question is like, how far can you go without, breaking down or breaking out? Well, this does make higher highs, right? It does. Right there. And still pushes out and comes back. And again, looking at these as a series of creek jumps, you can see that's a jump right there. And then you can see that's a jump right there. And you see each of these is just layering up one upon the next. It's still going up and over. And the narrowing that's occurring, right, doesn't really start coming into a point until it gets to that creek. So the overall direction here, no matter how you want to look at it, on this cat ear, right, is after the first iteration here, after it first starts building out, the next motion that's in place is still up to go back and retest the creek. It could have gone sideways, I suppose, but wouldn't have hit it at that particular time. Later, we do find that we basically come back to this level again on the back end, right, to retest. But the first motion is to go back and retest that outer wall. So why am I using this as an example? Because again, this is a really clear, easy way to see between the ears. And you might say, well, what's this then? Well, it's the same thing. It's just bigger, right? I mean, this is the same pattern. It's just playing out on a much larger scale, right? And this is the same pattern that's still playing out on a much larger scale, and so on and so forth, right? And then you can see the same pattern playing out on a much larger or smaller scale locally, you know, going into the end here, and probably even before that, going into the end here. And that's the iterative motion of wave analysis that could look really bullish, could look really bearish, but ultimately does it cross the bigger creek. So when we look at this current time frame, I think about that and I'm like, it's probably pretty similar in some regards. Maybe it's not going to be as obvious in terms of like levels because we're kind of sliding and it looks weird. And I get that. We're really far away from that area right now. But there's a similar motion. And so the real question is, like, where do we need to go? Where's the creek at? I still think it's over here. I still think it's over at like $4. I still think this is what was in view. We may not go up to 426 anymore because it's not within the window of opportunity anymore, but we probably could get to 4 pretty easily. We're really not going to see that like hyper compression until we get right up on that edge, more than likely. Well, what's to stop us from just kind of going sideways here and never going over there and just waiting until May? Well, nothing, right? Except for, again, what we're seeing as the kind of the duck on the water bit, which is what's going on underneath the stock, what's going on in the market on the whole. So I'm not going to lecture more on that because I think that kind of summarized it and I think it's basically finished. Like, that's all I need to say about it. And I don't know for a fact it's going to do this as opposed to chopping more like sideways right here. But I do know that no matter what happens, as you build out, you're probably going to compress one way or the other. And I don't, again, can't sit here and draw it perfectly because I don't know exactly what that's going to look like. But typically the levels are pretty straightforward. Usually you can look opposite and see what happened previously. And that's going to give you a pretty good idea of where those levels are. Like we have rising creeks here on the left side. We've got a lot of repetition of form. So I'm going to suggest that it's going to be pretty darn similar to what we just talked about. That you are going to get distribution and it's going to come up and it's probably going to go higher than we expect. There's going to be a lot of volatility in that. We're more than likely going to be hitting the first ledge here at 335. That's usually a given. I think at that point, you're going to have some pretty nasty sellback. And then I think more than likely, again, you're going to head back up towards the top. I'm going to move this over. You might at this point make a higher high. This would be very similar to what happened in 2000, the one we just looked at, where it goes ahead and hits near 4 or hits near 390. You know, I don't know what's going to come first. But after that particular point in time, I think you're then going to have like another, you know, slog, basically. And the last bits of this are going to be essentially just you trying to get out. I would say not the shorts, but the long institutions trying to get out of long positions, get ready to take it back down, entering into short positions, and take it back down again. This is the moment where you have a real sell down, in my opinion, that finally comes back down to these lows we've been talking about forever. And this is what I'm seeing, again, on the market whole as probably the most likely. I think IWM and SPY may see quite a big reach. I think IWM could come up as high as like 220. That's kind of been the number that I've been putzing around at. It's possible it stops as 214, but I really only have those two numbers in mind. I don't think it's going to be lower than that. I think it's going to be 214 and or 220. I think that's very likely going to be the situation here. Very likely. I'm not 100% positive it's going to go straight up There could be a lot of messy stuff in the middle. You could have a bounce that then comes back down and then goes way up. I don't really know, but I'm pretty sure it's going to get there because I think that the market needs to enlist more sellers in this particular endeavor to come down by distributing shares and getting the buyers out who are just kind of itching for upside here. That relief is, in my opinion, short-lived, and I think you're going to get a big dump after that. And then, and only then, probably again going into maybe the summer months, May and June, after you kind of rough out a bottom here, then I think we're probably going to be in for a pretty historic year. My guess is that by the end of the year, we're going to be green. And if you look at the overall picture here, that doesn't take too much. This January is like 221, you know. And I think that, again, big picture, when we look at this as a potential, and it's just potential right now, but we look at this as a potential gigantic cup and handle pattern, the retracements are low. I mean, they come down to like the 190s. But the overall move back to the upside from 190 on average, and I'm going to use like a really conservative number here, would be this box. I'm not going to use the tops, even though you technically could. I think this is just a conservative way of looking at it. It's like 273. And then I think if you use the tops, it's probably going to be about 300. From the bottom of the handle, which is a 50% retracement, that's 295, 296. So you're talking about a historic potential rally here. Okay? And I don't think it's happening right now. All right? I think it's happening a little later in the year. But this may not seem like a possibility to you because you're thinking, well, that's all if statements, if this doesn't go into a recession, so on and so forth, and we would have that assurance. But if it goes into a recession, what then? Look, the only other thing I can say is that what else is on the docket here would basically be slipping down to 150s. There's really nothing else here. Like, I looked at a lot of different levels, and this is like the last kind of ditch level. You might maybe make an argument that it could be a little bit higher than that, like basically retracing back to those retracement levels that we made already in 2022, which again, does that seem kind of pointless? Probably. Does that make a lot of sense? If the market's going to stay bullish? No, it doesn't make any sense at all if the market's going to stay bullish. But I suppose, sure. You know, if we're in a recessionary period, is there a lower potential trend down here? Yeah. We could end up coming back really low. But, you know, channels are channels, and like anything else, it's easy to just kind of draw a straight line and be like, well, yeah, if this just continues straight down, we're going to go to 168 or this or that. Or to look at like a weekly EMA and say it has to come hit this weekly EMA. And that's what we see on SPY, is that there's a possibility it comes back down to a long-term weekly moving average. But it doesn't go against the creeks that are already there. It's just there. It's a possibility. I just don't think it's going to happen right this second on a rug pull straight down. Why not? Well, what is this to COVID, you know? We have a president who's negotiating tariffs. We have some chinks in the labor market. We've got, possibility of a recession, sure. But to think that any kind of good news wouldn't somehow change that course, I think is a bit silly. And it wouldn't take a whole lot, even of the imagination, to consider coming back up. For example, this daily 180, which is sitting at 220, to come back up and test that before going down further to a weekly 180, which might be lower. Sure. Like, why is that even a question? Like, this is the way the market runs. So I just don't find it to be very compelling, the idea that there's not going to be like upsides. It just doesn't make any sense. My plan is pretty simple, and it's my plan, is if this pushes up again to like near the 214 to 220 range here, I'm probably going to be bearish as soon as it hits that area. I'm not going to stay bullish. I'm not going to assume that this is just going to keep rallying. I heard somebody say on my Discord group that they think it's going to go back to all-time highs. That would be like the S&P 500 breaking out here and then going or excuse me, the IWM going all the way back up to like 240 and then coming, I don't know, then coming back down or something. Is that possible? Maybe. It'd be pretty bonkers, you know, pretty crazy. I don't know if I like that idea. I'm just being straightforward. Is it possible? Sure. Do I think that the S&P 500, everything's possible, right, in the market? Do I think the S&P 500 is more likely to hit all-time highs first before coming back down? Only if this particular rally just kind of goes crazy do I think that happens. If this is like a shouldering action down, my expectation would still be not that it would come up to all-time highs. It's kind of right where it should be. Like the triangulation here is pretty spot on. It should be around 600. I don't think it makes as much sense to me that you would rally all the way back up to beyond the top before some massive dive. Could it happen on some kind of account of some kind of news or something that catalysts and then reverses and drops the market? Maybe. But what seems more likely to me is usually the more conservative approach, which is, yeah, you've got these levels. They're just waiting for news. They're waiting for some kind of relief, the market is, and then you're going to get the relief, but it's probably not going to rally beyond, in my opinion. And I think you're going to reverse, and then we'll talk about downside again. I don't know for a fact it's going to go this low or that low. I'm just marking off levels on my chart and preparing for what could be a major market drop. We've just had one. Like, I guess that's what I'm trying to get at, is like, this is a huge drop, right? This is a major retracement. We're basically almost into correction territory here at like 8 or 9%. We'll probably get as close as we possibly can. If this goes down to like, there's another kind of, it's a weird one, but it comes back from September. There's an uptrend there. Use scissors if you need to use scissors. That's really loud. Hey, use scissors if you need to use scissors.
I need to use scissors.
It's really loud. Open it like a normal person.
How do you do that?
You know how to open a box.
No, I don't. I don't know how to open this box.
Okay. Here, let me see it. Let me see it. Nope, I don't have to repeat myself. This is the tab right here. You see this? That tab should be broken, and then it should open right up. This is usually how these boxes work. Okay? Anytime you see that little circular piece of tape, that's how it usually works. Got it? Box troubles. Yeah. Well, that's what I'm trying to say. I don't think... Well, like, all right, so Goblin, there's only two possibilities for that February 2026. In my opinion, it's a pivot low or it's a high marker. The way that I have it measured, it should be the end of a big wave. If we're not up high in 2026, we've got problems. Like, a wave is a wave, right? It's not complicated. The way that I measure things out is based on like middle trajectories. So if this is a wave and you have a breakdown here in the middle, and bulls were trying to hold this kind of middle spot and then they failed, well, this becomes like a trajectory middle, right? And that to me is not a question mark. That's more of like, okay, it's pretty straightforward. That's the center mark of a wave. You could come back up, almost like a butterfly or something, right? But the cat ears are in the middle. Yes, true. All right. That really typically almost always works out. Even if I'm like not quite right about where the perfect bottom is or this or that, this wave typically works out. It just does. It usually comes back. As long as you get this middle right, which is the human error part, it works. The problem is that there are situations where it's so weak. And we see this sometimes on these like penny stocks, right? There can be situations where it's so weak that that middle isn't pointing up, that it's like pointing down. In these situations, there's a tendency to maybe look at this and even think like, well, you know, it could be, there's a tendency to look at this and kind of see what we want to see, like, oh, it could be like going that way. But sometimes it's just there, it's not there. Like, so the wave is actually building out lower. I don't see this on AMC, but it doesn't mean it's not there. It's possible. What I see on AMC, to me, looks clearly like a bottom, and then an attempt to try to break that break low, but it's happening higher than the previous low. What about the Judge Zern thing? What about the chart shift? Well, that's the only thing that I have major concerns about, is the chart shifting kind of business. But it did not set up that area right before that Judge Zern decision and the ape becoming AMC again, did not set up lower than the previous bottom. That would be considered like the middle cat ear, the breakdown of the giant S-curve. It sets up higher. So there are situations where, yeah, this happens, and then we think that, oh, it's going to break back up and go high back to these tops or back to these levels, and it never does because it just gets stuck. That's often what we see on, unfortunately, a lot of these penny stocks that we look at, that there's an issue of like, it's not really showing much strength, and it only has the chance to go up, but it's not even like, the chance to go up is pretty weak. And in this particular situation, it could be even worse because it could take a really long time and it just never breaks that level, you know. And it's like, yeah, we've seen stuff like that plenty of times in the market on a wave down, that you think it's going to be good, and there are times where this has become kind of done crazy stuff like that, become like a bigger S-curve. It's really easy to move stuff around to see that because it happens all the time in the market. So my assessment that we're going to be up in 2026 is based on this idea that on AMC, that this did not break down low. It broke down when it was higher than the previous bottom, which tells me that the middle would be at least somewhat inclined from the previous low, meaning it's made a higher low. And I don't think that even looking here, I'm like, it looks like the same thing, right? So even looking here, you're like, well, you know, at worst, this gets stopped at like 550 or something, but there's plenty of inclination here. Like, it's going up. It just depends on how you break down the wave. It held up pretty strong at like 430, right? It looks almost exactly like the big picture, doesn't it? I mean, it really does. It's essentially like an iterative motion, which is good news because that is going down and it's not doing anything that's drastically changing, in my opinion, character. So the worst case here is that, all right, somehow I misread that. It's not really bullish. And the only thing I can think at this point to even try to kind of disprove myself would be to look at, because I'm 100% positive in my brain, and I would not be that way unless it had been cemented in me over the course of years, which is a bias. I get it. But I am 100% in my brain cemented that the two levels that are most likely for that time period, one is this 45 level, and the other is the near 60 to 80 level or 70 level. Based on this particular setup, this doesn't usually end poorly in the market when we've seen it in the past. When you drop down through and you don't check it, you're going to come back and back test it at some point. It seems pretty straightforward. We talk about this all the time on the downside. All the time on the downside. When it goes the other way, I should say. Like, so if we break out, we were just talking about it right here. We broke out really high to like 13, 14 bucks or whatever, 13.50s, and then we came back down. We didn't test that, back test that all the way, did we? So now we expect potentially to come back low. Well, the same thing applies on the bear side here. I mean, this jumped down and did never come back, and at least in terms of price action, it never came back to test this area or that trend that was lost. And that's the most typical thing you'd see on this wave. In order for me to kind of disprove it, what I'd probably have to do is make some kind of argument. And it seems like people want me to do this. I don't know, because every time I'm frequently asked, is this still at play? Is this still at play? Is this still at play? And I'm like, you really want me to like try to disprove it? I mean, I could attempt to do that, just for, scientific purposes, I suppose. I could make the argument that technically this wave already hit the top. That's not gonna make anybody feel good, but all it's going to take is a little bump. Maybe this wave already hit the top. I would suggest that this is usually a front runner RSI as opposed to it being, it's not the best leading indicator always, but sometimes it's the front runner to what we would see as price action changes. But you could make the argument that this technically already pushed up and hit that and is never going to go high again. If you really want to, like we could make that argument right now. The problem is that this is not really supported by the opposite direction, which is a creek jump. What it looks like is it looks like a front runner that's broken out, needs to retest perhaps lows here. It's jumped the creek, and then it would have another, and this is why we think sulking down makes sense going into April, and then it would have another rally back up, so on and so forth. Where did this happen before? Right here. Did this prevent it from making new lows? No, it did not. But was RSI a front runner on the weekly for a breakout? Yeah, it was. So when this happened previously, we don't have the exact same setup. There's similarities, but it's not the exact same part of this. But there would be maybe an effort to suggest that, well, I think this could have already come up and hit the top, right? And it's just like here. This could have already come up and hit the top, and it's not going to go up again. Like, okay. Yeah, but it did, So is this steeper? Is it less steep? It's a little less steep. At this point, we have a lot more history behind it, I guess. There's certainly an argument that this could take a really long time. Maybe it doesn't happen this next year. Maybe it happens in 2028 or 2029. Maybe it's super slow. Like, certainly a possibility that this takes longer than expected. But the nature of this as a jump that, it could be done, I don't really buy into that. It kind of spits in the face of what we've seen on most charts. If that jump happens on RSI first and then you see that drop in the low and there's that divergence, well, guess what? That's bullish divergence. You see the same thing right now. If this thing drops down, you guys, if this dropped all of a sudden $1 down to $2.30 or whatever, or $2, everyone's going to be crying about it being, it's over, it's over, it's over. But just look at the weekly chart, like, is this then potentially bullish divergent here? And I've got a lot of mess on here. You can't even see it. But the answer is yeah. Yeah, it is. I don't think it's that complicated. We talked about it a million different ways, a million different times. It's like, yeah, this could easily just drop from here. If it doesn't make a lower low, it's bullish divergent at this point because it's jumped the creek. So you can see why this idea of it going into May, June and kind of intersecting this low doesn't really frighten me at all. It kind of would be like the biggest buying opportunity really in the last like 4 years for AMC, 5 years even, since 2020, because if this has that kind of low drop and doesn't ultimately make a lower low, it's essentially exactly like what happened back here. And even more so, if you look carefully, you can actually see that there's a secondary divergence. Like this particular guy actually dips below, right, which would maybe be considered like a trend here of support. This dips below it and then comes out, and there's another divergence built into that after that pump and dump right there. I don't see that as any different than what we're experiencing right now. I just don't. And the fact is that we're really close to jumping that creek. Creek's right there. It's right there. It's right at like it's right at $4 right now. If we were to come down into May, it would be at like 330, basically right around the place that we first broke out over here at 330. Very, 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 very similar to what we see back here. If you remember, this is the original top right there. And then look at where that creek jump happens, right at the original top. Extremely similar to what we see here in this setup, where that top right there essentially intersects in the same zone. Okay, so something big would probably happen there. If the argument is that, well, I don't think it's going to go up that high, I don't see how it possibly could, all this other stuff about how it's not worth that much and so on and so forth, I'm not really arguing that this stock is worth $70 a share either. I think I'm arguing that the market cap is worth, if you think about it, I'm really saying that it's worth less than it originally opened at. That like long term, we're really just returning back to these levels that, if you remember, were like $9 to $12 per share. That's the market cap valuation now, equivalence. That doesn't seem super bullish to me. That just seems like pretty average for this particular chart. It could actually be quite bearish, because if you're returning back to those levels and failing to go above and distributing right here, you're just going to come back down and then have to retest this creek that you jumped over, which at that point is probably really low, probably way back down here. We could be in for a multi-year long potential double bottom back down to 3. So me saying that it comes up there, to me, it's not even like a financial issue. It's like a not even remotely significant in terms of finances. It is a big deal for a percentage-wise move, but in terms of the fundamentals of the stock, I don't see it as impactful at all. I don't know what the argument would be. It's not making new all-time highs. You know, it's it's really not even coming back to the original buy-in level. It's probably, my guess is, and I think I've made this before, is I think this is probably the shift value right here. Like, that's the shift. That if this had not shifted, what we would be doing really is coming back and retesting the original opening values of the stock, which totally makes sense looking at the chart. And this is what I was saying over here. It's like, this totally makes sense to me that you would come back and retest that level. I've already talked about this, but there's like no questions in my mind. Like, we've seen this so many times in every different, you know, corner of the market. It's all over the place. I don't think it's very unique. It almost has to do that before it can kind of continue on. The only other argument I guess you could make, and I think this is a tough one, because I guess you could make this argument that this cat ear, like we were just saying a minute ago, might define like a different wave. We were talking about how, like, if it's slumping like this, maybe that means that it's not going to go as high. You could potentially make the argument that, again, it's going to do that, but notice that there's no slump here. This is kind of the other issue. So, like, I've been looking back and forth at it, and the only thing I can say for sure is that I don't see a slump. Like, I don't think it's possible. I don't want to say it's impossible, but it seems like at the very least it would come back to this level at 52.60, because that's the last interactions that we have here on this kitty cat here. Down, down, up, up, up. It's right there. That's the key level. That's the same level that we took off from back in the second part of the run in May. So why do you think then it could go up higher then? Where's that even coming from? Well, again, the angle on the previous bottom to the top is different than that. That's just flat. So this cat ear doesn't even really have a slump to speak of. So I'm trying to say it does not do what I'm illustrating right here. Like, this is a very extreme weakness, right? Where it doesn't even come back and retest the previous bottom. And that's happened before in the market, right? And then you end up with a really weak wave. But that's not the case. Did we luck out, or is that just part of the plan? Honestly, I think it's pretty straightforward. I think it's just the anchoring of liquidity, and it is part of the plan. And this is the 50% mark on this bigger move. So it makes sense that we kind of hook beneath it and that we may eventually go back and test it. And do I think the shift value plays a part into that? Yeah. One thing that's kind of curious about this, perhaps, is that there's a couple different, maybe only 2 different ways to read it, I suppose. One would be to use like the closing value, which would be here. And that might suggest that you don't actually come maybe below or above the top of the gap, or the bottom of the gap, I should say, which is at like 37. That could be an argument, I guess, that you don't go beyond 37. But there's also another upthrust that happened here, and it goes to like higher push. I'm going to have to use at least the 4-hour for this so I can see extended hours. But that actually makes a completely different argument, which is that, again, it should go high, not low, and not flat. And that was that weird change of character that happened on the push-up. At the time, it was like $8 or something, and then it opened at $6. Never went back up again. Something like that. Or opened low and then pushed up, whatever it is. It was a while ago. So you're asking me, do I still believe? I mean, I still trust that the data is exactly the way it was. I'm not, like, nothing's happened that's made me think otherwise. I mean, in this particular case, this is like the most extreme you could probably get with something like this, is to use extended trading hours. You see the points on the ears, and use like the low here and the high here, and this would point to like 150s. And that's probably the most extreme argument that I can make. I don't think it's the best argument. It's probably a little too extreme, but that's even higher than what I'm suggesting. Is it possible? I guess. Anything's possible in the market. I'd have to see what that's going towards. My guess is that we're looking at a retracement back to, in my opinion, again, by about that time. I think we had done this one before too. It was like right here. I think at the time we were thinking like it wasn't 35, it was like 21, but I think that was after Ape, because this was like 35 originally, and then Ape was introduced, and this became like 21 or something like that. And that level has still been on the radar for a while, and that's kind of the only other one I could think maybe would be at play. And it looks like it's way out here. I don't know where that is.
Ugh. Gotta be kidding me. Well,
This looks like February 2026 at 185. Again, what's the problem with that? Well, there's a number of things that could be wrong with that. A, that was right before we did a major market shift. B, this used to line up, you see this like channel that I have, that used to line up with an intersection of like this upward channel. So I would venture a guess, without going too crazy on this, I would venture a guess that that's probably what was the reason that went up to that point, was because it's like the middle of this channel, to like check it before distributing. And that would imply that, yeah, it's possible that this middle channel is still in play here as a possibility for triangulation. But again, what happened after the shift value would be that you would have to take that down the 226% or whatever, because it's no longer there. It's like not in that specific situation anymore. So
Daddy, where's the bags?
What bags?
Oh, where's the bag where I can put all the stuff in here?
Like Ziplocs?
Oh, what's the point of even putting it in here? Nothing useful.
I heard something going, a motor going.
Yeah, but now it's broken.
I'll come check it out in a minute.
You can't fix it.
You don't get to tell me what I can and can't do. I will decide if I can do it. And if I can do it, then I'll do it. I'll try to do it. And I'll help you through it. Okay? And don't tell me I can't do it. I don't know if I can do it, but that's really negative. This right here was probably, again, a little bit maybe old-fashioned. I don't know exactly where it would be. I'd have to kind of do the math, but I'm guessing it's like right here. It's probably this old level at 112. Just those shift values all kind of end up being about the same distance. So actually, it's pretty big, isn't it? It's a big shift. Let me think. Maybe it'd be like there. Yeah. It's $80. So it ends up shifting down all the same. Still the same zones. So I think that's right. And that makes sense because, again, that would be a macro wave analysis check. Macro wave check on the back test here on that creek, and then also the downward trend being established. Basically, it's the same distance traveled as the previous one. Does it just so happen to be that way? No, this is like almost mechanically like locked in because of the way that the operators traded it back then. They traded those levels rigidly as if this was going to be like a wave through that came back up later and developed a new downtrend. And it is a downtrend until it isn't, unfortunately. And this is why I think previously we had talked about how this could be like a spring, but even if it is, it has to come back and retest the floors at 10. And that's where you could end up with almost like a double spring, if you want to call it that, double bottom. And maybe if that's a phase B, then we haven't even made the spring yet, you know, hard to say. So anyways, that's the same point. I ended up kind of going in a circle, but it was the same exact zone. So it really doesn't make any difference. You can chart it any way you want to chart it, bearish or bullishly. It still looks like it's still developing into the same pocket here. What about the idea that it's a pivot? I'm not seeing that on a macro scale. But a pivot would imply that this is actually like a wave low, which, again, there's a lot that goes into that because essentially it would be saying that you're no longer going to be measuring it out one-to-one, which is logical but not necessarily required. If that were the case, then you're building out a bigger wave, in which case this is going to take a long, long time. So it's like an expansion on the wave. This wouldn't be going back up until it's ready probably to break out, you know. I don't know. At that point, can't even see it. Probably 2029, which is something else that kept popping up because of their delay of debt and equity and junk. For 2029 kept popping up as well. So if this is like a macro expansion where this is sort of building out a really slow burning upward motion, and then this could still signify like a middle. What we're really talking about is a one-to-one wave reaction. So how do you know which is possible? Don't. Like, there's nobody in the world that could tell you except for maybe the big money operators. Like, I don't care how good you are with TA. At the end of the day, like, it happens or it doesn't. If it doesn't happen, you're going to get signs that it's not happening, you know, because you probably see something like a really weak push up here. Maybe it only goes up to like $10 or something. I mean, that would be an easy to read kind of setup. Is if we start seeing like chinks in the armor early on, you know, we're not getting what we think we're going to get. That's just simple, like, deductive logic. Like, well, this isn't yielding the results that we want. We don't want to get stuck under 11. We don't really want to get stuck under 650. You know, if some of these early moves end up proving really weak, we've got an issue. I don't think it's worth overcomplicating it. Why is the stock traded like this? Because of retail and short involvement. Smart money likes having a lot of shorts in the play, and they like having a lot of retail in the play. It makes it easier to manipulate the stock and move it around. On a weekly time frame, to me, it looks pretty much just like the bottom that we experienced in 2020. Everything's set up almost exactly the same. We're missing, in my opinion, we're missing like that kind of push with the drop. Maybe we already got the push. We're just missing the drop. I think it's not there. I don't think we've had enough anyways. I think we need more. We need more of a load up and then a big rug pull. And then I think we're ready to go. That's my opinion. So this little bit that we're talking about on the micro looks like it fits like a glove on the macro, on the big picture, on the weekly. So if you're thinking like, well, you're just looking at two small things, like really tiny things. No, I'm not. That's mischaracterizing what I'm actually doing here, which is I'm trying to develop a case that is what I said it is. It's basically that it's actually building out this way to the benefit of the big picture. Because if this were to happen here on a small scale and we got some pumps up to the fours and then we dropped, again, it's essentially like perfect. It's exactly what you want to see. This is exactly the way you'd want to see it on your indicators going into June and May. You don't want it to be ripped. So anyways, at the end of the day, we're in a bit of a stalemate. I think that the market is having a place of uncertainty and that it's kind of going to sell off until it doesn't, right? But I don't think that the first sign of good news is going to be the market turnaround. I think the first sign of good news is going to be the market pumps before a major dump. That's kind of the summary of the day. In the meantime, we're going to keep selling off until we get some of that news. I don't see it changing yet, unfortunately, because it keeps doing the same thing. Like, it's clearly been at a point where it could turn around at any second, and it's just, I want to say the word iteration is the word of my day, but it is kind of, this is kind of doing the same thing. We're going to keep trying to develop sell-offs and drive the price down till something gives. Right now, there's a lot of problems with the bear side, meaning them being more in control. And so I could totally understand the reservation that you have to any kind of a rip here. I'm not trying to predict it beyond just saying that I think it happens, but I can't tell you when, which doesn't really help. I'm seeing some signs that it's probably by the middle of this week, other signs saying that it goes into the end of March. There were some positive things that kind of made me think that was right, because that had happened before he made that announcement, the president, that it was going to be April 2nd when they're going into effect. So there could be some really important significance to the fact that, okay, well, you had some indication this might go up in the end of March, and now we're talking about April being like a catalyst moment, potentially, for bear news. That's a good reasonable, pairing of technicals and news-related media. So it wouldn't surprise me if that's the way it happened. But like I said, I couldn't really tell you if this actually pushes up and then just continues to push versus something more drastic. Like we could get like an early squeeze to 210 that then drops all the way back down, creates a sign of weakness, and then goes all the way up. I mean, the market's going to do what the market's going to do there. We're going to have to watch every step of the way, unfortunately, to really kind of see it. But my plan is to trade until I see the S&P 500 and the IWM, which is the small caps, kind of get to this place where I think they're ready to sell again. I do think that's going to happen. That's my opinion. I could be wrong about it, but that's what I'm seeing on a technical level. And I'm seeing this as like a ticking time bomb, basically. Like it's just kind of waiting. And it's waiting in the water, waiting in the sides for a news catalyst. And until till that happens, I do expect probably going to keep sinking as low as we can get. I mean, I don't see why not. So we're just going to keep pushing down. Okay. All right. No, I did not get to chart it. I was just trying to do a quick overview. I can't do it right now. I'm going to go help my kiddo with this project that he's working on. So I'm going to head out a little early. Apologies for not getting to that. But I got to get to this. It's important. So I will try to get to that tomorrow, first thing. So just remind me when you get on tomorrow. I think that's a good summary of my thoughts for the week ahead. So hopefully you guys find that beneficial. Sorry it was a bit brief and a bit fast and a bit crazy, but it is what it is today. So yeah, I will always try to get to it if I can, but I can't do it right now. So AGH, I mean, yeah. Yeah, unless something changes, I don't think I'll be back on today, but I do expect this to be what we see for the week. So I'll definitely be on tomorrow. That's my plan anyways, unless something crazy happens. I don't know anything about the subpoena to Citadel. Know anything about that, so yeah. All right, you guys have a nice day. We'll talk to you later.